Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two strong buy dividend stocks that insiders are snapping up. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're talking dividend stocks. We'll be looking at two companies whose stock is rated a strong buy from analysts, and on top of paying a solid dividend, they also have some double-digit upside potential. Then in addition to all of that, they're also being bought up by some insiders, which can be a helpful indication. So we're going to take a look at these companies, what it is that they do, and what analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, now the first dividend paying company we're taking a look at is Energy Transfer. Their stock trades under the ticker ET and is currently priced at $9.34 per share. Energy Transfer pays a quarterly dividend of 15 cents per share, which works out to a current yield of 6.57%. They just paid their most recent dividend on August 18th, so we'll be expecting the next one to come up in November. As the name suggests, Energy Transfer is in the energy sector. They are a midstream company, operating in the area between the wellheads and the distributors. They are the leading midstream provider in the U.S. Their operations include the transportation of natural gas, petroleum, diesel, jet fuel, gasoline, propane, ethane, and butane. They actually move more than 30% of our nation's natural gas and petroleum, and their 90,000 plus miles of pipelines could circle the earth almost 4 times. They are the only logistics provider with export facilities on both the U.S. Gulf Coast and East Coast, and their Nederland terminal is the largest single-owner above-ground oil storage facility in the U.S. In the second quarter of 2021, they moved approximately 3.9 million barrels per day of petroleum. They have a network of assets, including pipelines, terminals, and storage tanks, connecting operating areas in Texas, Oklahoma, and Louisiana, as well as North Dakota and the Appalachia. While working on de-risking Energy Transfer, one area that they've focused on is debt reduction. Year to date, the company has reduced their long-term debt by $5.2 billion. They're also working on a more simplified organization and reducing their overhead costs. Energy Transfer recently shared their Q2 earnings report, and the company's revenues, which were depressed throughout 2020, have rebounded significantly this year. While they peaked in the first quarter at $17 billion, their second quarter top line of $15.1 billion is still better than any other quarter in 2019 or 2020. Their earnings per share for Q2 came in at 20 cents, up 53% from the year-ago quarter. They also recorded a stronger cash flow in Q2 than the prior year's second quarter. Distributable cash came in at $1.39 billion compared to $1.27 billion in the prior year, a gain of 9.4%. Now, taking a look at the insider activity, the most recent purchases of the shares come from a board member, Richard Brannon. He's made a couple purchases totaling over $600,000 worth of the ET share. He now has a position of about $2.5 million in the company. One analyst weighing in on the stock is Justin Jenkins from Raymond James. He says that another $1.5 billion was lopped off of debt balances in the second quarter, positioning Energy Transfer for a pivot to overall capital allocation back to equity. Moving forward, their day-to-day dabble headlines can always pop up, but the focus should be on the completion of the ENBL deal and what Energy Transfer can do with excess cash flow in 2022 and beyond. There are 5 analysts altogether that have a current rating on the ET stock, and it does come in as a strong buy based on unanimous buy ratings. The average price target comes in at $14 per share, which would be an upside potential of about 50% for this next year. And all of our price targets are in a fairly close range, between $13 to $15 for about a 40 to 60% upside. The second dividend-paying company on our list today is Enterprise Product Partners. Their stock trades under the ticker EPD and is currently priced at $21.81 per share. Their dividend is also quarterly at 45 cents per share for a current yield of 8.24%. They also paid their dividend in August, so the next one will be coming up in November. It is also worth noting that the company has had 22 years of distribution growth, and in total they've returned $40.8 billion to unit holders. Enterprise Product Partners is another energy midstream company. They are one of the largest publicly traded partnerships and a leading North American provider of midstream energy services to products and consumers of natural gas liquids, crude oil, refined products, and petrochemicals. The firm controls oil and natural gas terminals and pipelines that feed product from production regions in the Appalachian region, the Midwest, the Rocky Mountains, and Texas to processing, storage, and terminal facilities on the Gulf Coast. Enterprise claims more than 50,000 miles worth of pipelines and boasts storage space for 160 million barrels of oil and 14 billion cubic feet of gas. Their 4 core business segments are focused on those natural gas liquids, crude, natural gas, and petrochemical, but they did have a new team formed in 2021 that is evaluating opportunities in carbon capture, hydrogen, and renewable fuels. Energy Product Partners also recently shared their second quarter earnings report. They showed an earnings per share of 50 cents on revenues of $9.3 billion. Both were up slightly year over year and in line with expectations. Their adjusted EBITDA for the quarter came in at $2 billion. Taking a look at our insider activity, we have 2 major purchasers this month. Now, with these 2 purchases, we do have an uninformative and an informative buy. So to quickly tell you the difference between the 2, an informative buy means that the insider deliberately made that trade, so it can show more of a vote of confidence. An uninformative buy means that they were maybe receiving these shares as a form of compensation. So we did have an uninformative buy from their co-CEO AJ Teague, who purchased nearly $500,000 worth of the shares. He now holds over $49 million worth of the EPD stock. Then we had an informative buy, a couple of them from a director, John Rutherford. He purchased over $440,000 worth of the share, bringing his stake up to $1.2 million. One analyst weighing in on the stock is 5-star analyst TJ Schultz from RBC Capital. He says that we think EPD's large asset footprint should allow it to pick off some low-hanging fruit related to the energy evolution theme, particularly around carbon capture and storage and hydrogen logistics, though these projects are a couple years out. On the base business, EPD is still leaning into petrochemical, and as EPD potentially prioritizes attractive and accretive growth projects over more buybacks, we think this segment can capture an increasing mix of growth CapEx dollars. The EPD stock currently has 6 analyst ratings, and once again we have unanimous buys. Their average price target of $28.67 would be a growth potential of 31% for this next year. And once again, we have a pretty close range for price targets. On the low end, we have an upside of 28%, and on the high end, an upside of 37%. So there are our 2 strong buy dividend paying stocks that not only have some great upside potential, but has some votes of insider confidence. So let me know your thoughts on these 2 companies in the comment section down below. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic weekend, and I will see you back here next time.